If you've been paying attention to the news or social media lately, you've probably noticed a lot of buzz around cryptocurrency. And for good reason. With Bitcoin's price predictions ranging anywhere between 75 and 250k in 2025, it's hard not to wonder. What exactly is cryptocurrency, and more importantly, should you jump on the bandwagon? In today's video, we're going to talk about cryptocurrency in plain and simple terms. Whether you're an experienced investor or just curious about the space, we're going to cover what cryptocurrency is, why so many people are drawn to it, current market trends, and practical strategies you can use to help decide if investing in cryptocurrency is right for you. At its core, cryptocurrency is a type of digital or virtual money. Unlike traditional money like dollars or pounds, it's not controlled by any government or central bank. Instead, cryptocurrencies use special technology called cryptography to secure transactions. Most cryptocurrencies operate on something called blockchain technology. Think of blockchain as a digital ledger with the records for every single transaction across a network of computers. What makes this system special is that it's decentralized. That means that no single person or organization has control over it. This setup makes cryptocurrencies secure, transparent, and resistant to fraud. The most important thing to know is that cryptocurrencies represent a new way of thinking about money and value. Number one, we have a potential for high returns. The biggest draw for many investors is the potential for massive returns. Let's take Bitcoin, for example. When it first launched in 2009, Bitcoin is worth less than 1 penny. Fast forward today and it's trading at over $100,000. That kind of growth is unheard of in traditional investments. At number two, we have innovation. Many people believe in the technology behind cryptocurrency, particularly blockchain. They see it as a game changer that can help revolutionize industries from banking through to healthcare. Cryptocurrencies allow people to transfer value without needing banks or middlemen, which could fundamentally change how we handle money. At number three, we have decentralization and freedom. Some investors are drawn to the idea of decentralized money. They love that the money isn't controlled by governments or big organizations. Cryptocurrency can offer more privacy and freedom, which has made it especially appealing to those who value independence from traditional financial systems, especially after 2008. Now we know this, let's jump into the current market trends for 2025. Let's talk about where the crypto market stands today and where it might be headed. First, let's discuss Bitcoin. Bitcoin is by far the most well-known cryptocurrency, and it's been on an incredible run recently. At the start of 2024, Bitcoin was trading at around 44k per coin. By the end of the year, it has surpassed 100k, with experts predicting its value to range between 75k and 250k in 2025, thanks to increasing institutional interest and key recent events like the Bitcoin halving. Now, I know I just mentioned something technical. If you're not familiar with halving, this is when the reward for mining Bitcoin gets cut in half. This reduces the number of Bitcoins created, often leading to an increase in demand and value. Basically supply and demand. Up next, we have Ethereum. Ethereum is another major player in the crypto space, known for its smart contracts. Ethereum allows developers to build decentralized apps. Its current value is expected to fall between 2.5 and 5.5k in 2025, driven by upgrades like Ethereum 2.0 and its expanded ecosystem. And then in addition to the likes of Bitcoin and Ethereum, we have other cryptocurrencies, and there's a lot of them. Bitcoin and Ethereum are considered the safer options when it comes to cryptocurrency. However, there are more riskier assets that potentially have higher returns. Think Dogecoin and Pepe. These coins have wild price swings, and whilst they can offer quick profits, they also lead to significant losses, so approach these with caution. Now, it's also important to understand how the crypto market works. One of the most important things to understand and remember around cryptocurrency is that it's cyclical in nature. The market usually moves between two types of cycles. First, you've got bull markets. These are periods in which prices are rising, optimism is high, and investors are eager to buy. Then on the other side of the coin, you have bear markets. These are periods where prices are falling, often called crypto winters, because they can feel long and cold for investors. We're currently entering a bullish phase, driven by the positive regulatory changes and technological advancement. Knowing where we are in the cycle can help you determine the right time to buy or sell. Now you understand the basics around the market trends, let's discuss 3 key strategies for investing in crypto. Number one, you've got what they call HODLing, holding on for dear life. This strategy involves buying cryptocurrency and holding onto it for the long term, regardless of market fluctuations. The idea is that prices will eventually rise even if there are short-term dips. This approach requires patience and confidence in the assets you're holding, but this has historically worked well for mainstream cryptocurrencies like Bitcoin and Ethereum. Number 2, we have dollar cost averaging, also known as DCA. With dollar cost averaging, you invest a fixed amount of money at regular intervals, say every week or month. This helps you to avoid trying to predict the perfect time to buy and reduce your risk of investing a large sum at a high price. Over time, the approach lowers your average cost and lets you take advantage of market dips. And at number 3, you've got trading based on market trends. For more advanced investors, actually trading based on market data can be a lucrative strategy. This involves buying when prices are trending up and selling during downtrends. Whilst this can lead to quick profits, it also requires significant research, time, and technical analysis skills. If you're new to investing, it's best to avoid this strategy for now, as you can blow up your account pretty fast. Now we know this, it's also important to know how to stay safe in the crypto market. Whilst the crypto market offers huge opportunities, it also comes with risk. Here are some key ways to stay safe. Number 1 is to only invest what you can afford to lose. The crypto market is highly volatile, meaning that prices can rise or drop dramatically in a short time. Avoid using money that you need for daily expenses. Number 2 is to use secure wallets. Store your cryptocurrencies in secure wallets such as cold offline wallets, as these are less vulnerable to hacking. Just obviously, if you do this, make sure you don't lose your recovery key. There is a news article of someone out there that has been looking for a tip for years trying to find his Bitcoin that his ex-girlfriend threw away. It's also very important that you're aware of and avoid scams. Unfortunately, scams are common in the crypto world. Always double check websites, apps, and offers that seem to be too good to be true. And number 4 is to diversify your investment. Don't put all of your money into one cryptocurrency. Spreading your investments across multiple assets can help you to reduce risk. Now we know this, it's also important to try and look at tax-efficient options if you can. If you're worried about losing too much money of your gains to taxes, look into tax-efficient ways to gain exposure to crypto. For example, in the UK, you can't hold cryptocurrencies directly in an ISA, but you can invest in crypto-related stocks or ETFs through an ISA or a pension account. In the US, there are some platforms that even allow you to invest in crypto-related funds with tax-advantaged accounts like the IRAs. Popular platforms for crypto investing. If you're ready to start investing, here are some beginner-friendly platforms to consider. First, you've got Coinbase, which is user-friendly and packed with resources for beginners. Next, you have Binance, which offers a wide variety of cryptocurrencies for both beginners and advanced users. Then we've got Kraken, known for its strong security features. And then finally, you've got Revolut, a financial app that lets you hold and buy cryptocurrencies alongside traditional currencies. It's also important to know some emerging crypto trends for 2025. As we look towards the future, 2 exciting trends that are emerging include integration with AI and real-world assets. Cryptocurrencies are being combined with artificial intelligence and traditional assets like real estate, offering new investment opportunities. And then secondly, you've got GameFi. This combines gaming with finance, allowing players to earn rewards whilst playing their blockchain-based games that they love. Cryptocurrency always continues to evolve, and staying informed about these trends will give you an edge over other investors, as this is where you can really make the top gains. Cryptocurrency is a dynamic and rapid changing market. Whilst it offers exciting opportunities, it also comes with significant risk. The key to success is understanding the market, using sound investment strategies, and managing your risk appropriately.